Tonight, trade war confusion between the US and China is sending the markets into a tailspin, and any enthusiasm for an alleged ceasefire between the two appears to have vanished. Donald Trump tweeted today he's a tariff man and left open the possibility that the talks with China could fail. All of which means, despite the optimism and the bonhomie from the weekend's dinner and what you and I talked about yesterday, all of that, investors, as this graph shows, realizing the trade war is far from over and arguably is getting worse. So remember, we're up sharply yesterday, but even that was off the best of the day. We opened about 100 or so points lower, give or take. We sort of tootle around most of the morning, around 250 lower. And then just before lunch, it drops 400 points the market. And throughout the last 3 hours, those losses have accelerated. At one point at 1:30, it was over 805 points lower. So you look at a massive fall on the day. Now, a recovery of sorts, not much, I would say a dead cat bounce has happened. The market is now still down 679 points. But we are in the last hour of trade, and that is the most dangerous, volatile, whatever you want to describe. So this market, it would be a fool that would predict which way this will go before the close of business in 58 minutes from now. All the major indices are lower. The Nasdaq is back in a correction territory, down now. You see, it's even fallen since the start of the program. It's now off 3.1%. The tech is down. Apple, Amazon, Alphabet, each are off some 3%. And the banks are being hit very hard today. You've got Citi, Wells Fargo, Bank of America, all off 3%. Goldman Sachs is down 3.5%. Some of the banks are even off as much as 5%. Peter Tuchman is at the New York Stock Exchange. Peter, good to see you, my good friend. Well, what happened? Why did the market suddenly turn sour?
So I like your introduction, Richard. You said only a fool would be able to predict what was going to happen in the last hour of trading. So I'm happy to be here to help you with that. Anyway, well, obviously what happened, the narrative turned negative on the day about the China question. A lot of mixed messages off of yesterday's good news, which I think the market sort of digested midday yesterday, that it wasn't that enthusiastic about a deal that's going to happen about the deal. There was nothing really locked in stone on this one at all. And today they kind of realized with the tweets and with the narrative a little bit about global economic growth slowing down, but that in fact there is nothing going on with the Chinese that we can lock our teeth into. And that was the enthusiasm that took the market up yesterday, and that's the lack of it that's taking it down today.
Peter, in a moment or two, I'm going to be explaining, or trying to explain, the inversion of the bond yield in the mid-bond yield. Is the market concerned that the fixed income markets, the bond yields, are starting to suggest all is not well in the economy?
You know what? It's a little out of my wheelhouse, Richard. I'm not going to talk about it because I don't know it. But what I'm going to say is that, you know, it seems like the new norm are these 500-point swings, right? So I think we were up 2,000 points, 5–6% over the last 6 trading days. We're giving back half of it. So let's not read that much into it. It's suddenly all the fundamentals have not changed overnight. One day we look like it's a great bullish market. The next day we're in correction mode. So I think we have to take those terms off the table because they're not relevant any longer. 500-point moves on a daily basis seems to be the new norm. What we're seeing is we're giving back the enthusiasm of the positive China news yesterday. We're giving it back today because that narrative is off the table. Tomorrow will be another day. We'll see what happens.
Investors, ordinary investors, not the professionals like yourselves, but ordinary investors find this environment new, challenging, and worrying.
No question about it. I would think a retail investor looking at this would get rather anxious, right? I think one should not look at their portfolio on a down 700 day. They may want to take a view at it on an up 700 day. But, you know, at the end of the day, if people have been reactive in their portfolios every time we've been down 1,000 points or down 500 points and they sold at those levels, they probably would be regretful over the year, although we have given back a lot of 2018 profits. At the end of the day, it's not the end of the world. We are giving back some enthusiasm, but there is a bid in the market. We're off the lows of the day. Let's see what happens. I am not the fool who's going to predict the end of the last hour of trading, Richard, even though you want me to.
You're right, I do, but there's no fall like an old fool, and I'll join you in that one as well. Good to see you, Peter Tuchman at the Exchange.